Hello guys, this is Oba FX. Welcome to my YouTube channel, your number one stop channel for useful tips on how to trade derivative synthetic indices. However, I've been getting a lot of appeals by people who want to trade Forex, and they've been asking for beginner videos or videos that would help people begin or start off their journey in trading Forex. And to that effect, I've decided to come up with a series of videos that I'll be putting out from time to time to help these people start off their journey. So, without much ado, I would like to delve into it. So, I've put together a course that I titled Forex for Beginners. And very quickly, this is going to be our introductory class. And just like I said earlier, I'll be putting forth other videos to make sure that I help these people start. And the very first question that I would like us to answer would be, what is Forex? If anybody is going to learn how to trade Forex or learn anything about Forex, it will be pertinent that the person be able to answer the question, what is Forex? And simply put, Forex means foreign exchange. It is the exchange of one currency for another. So if you've ever had the opportunity to maybe travel out of the country, you would have found out that the currency that you'll be needing to spend in the country that you'll be visiting will be the currency of that particular country. I'm making this video from Nigeria. So if I were to leave Nigeria to a place like the UK, the means of legal tender there in the UK is the Great British Pound. So all I would have to do would be to convert a certain amount of money in naira to a certain amount of money in pounds so that I'll be able to purchase or do whatever it is I would want to pay for right there in the UK. Now, the process of doing that would be me exchanging the naira for pounds. So what I would have simply done would be I would have been involved in trading what Forex. So there are also scenarios where a lot of us, even from the countries where we reside, we purchase goods online from another country. So if maybe you are in a place like the United States and you want to purchase goods from China, the Chinese vendor would not accept the yuan from the Chinese yuan from you. The person would need you to convert your US dollars to the Chinese yuan in order for you to be able to purchase goods from this vendor. Now, the process of doing that is also you participating in what? In Forex. Now, the same applies if somebody sends you money from whatever country they reside. Once the money gets to your country, you would have to go to maybe the Bureau de Change to change that particular currency, be it the US dollar, the Japanese yen, or the Great British Pound, to the currency of your present residence. So, by those simple analogies, Forex, we said, simply means the exchange of one currency for another. The Forex market is the largest market in the world. Now, why do we say it's the largest market in the world? It's because it has a daily cash flow of over $6.6 trillion. Now, that's a whole lot of money, and it is important that we try to get the skill on how to get, even if it's a little of this large amount that flows every day in such a large market. Now, having such a large market to do business in is a massive advantage on its own as a good motivation as to why anybody would want to learn this skill. Also, other advantages of why you should learn how to trade Forex is that the market requires low capital to start because it can be done from any part of the world and even from the comfort of your home. What does that mean? It means that to start Forex, all you actually need are just maybe an internet, a phone, and a little capital, maybe as low as $100. Now, you understand that there are very few businesses today that you can go into with $100. There are even brokers that can give you the opportunity to fund your account with $50 and then you are good to go. Another big advantage of the Forex market is that it is open for 24 hours, 5 days of the week. So from Mondays to Fridays, the market is always open, and then maybe weekends the market closes depending on the location that you are at. Now, this ability for the market to be open for 24 hours is because you have a lot of people from different parts of the world trading at different times. So if maybe you're trading in the US, there's a session called the New York session, and then you're trading in the UK, they call it the London session. So by the time you're going to the market is closing in the UK, it might be opening in Australia or in other parts of Asia. So this keeps the market open for 24 hours, 5 days of the week. So this also makes the market liquidity abundant and available. So people are always ready to engage in exchange of currency. Now, talking about currency, we cannot talk about the Forex market without trying to understand what currency pairs are, because we said Forex is the exchange of one currency for another. So if you are exchanging one currency for another, it simply means that Forex is impossible without more than one currency being involved. In fact, without two currencies being involved. So we said you are either buying or selling a particular currency. So it means what we're dealing with in Forex is trading the valuation of one currency against another currency. So if if the value of the naira to the dollar is very, very low, whatever makes the is very, very low. So that means I would need more naira in order to get few dollars. But whatever makes the value of the dollar to reduce, so that means I will need less naira to get more dollars. So if I'm to put that in numbers, if currently the exchange rate in Nigeria is 1,600 naira would give you $1. Whatever makes the value of the naira to increase, I might now have to get maybe $1 for like maybe 1,200 naira. So you can see that if I'm to trade the naira against the dollar, what I'm actually trading is the value of each currency. And that's how is a difference in this value that helps us to make money from those markets. So what's a currency pair? A currency pair is simply a quotation of two different currencies. As we go on, we're going to be delving more into this and we'll get clearer understanding. So we said the currency pair is a quotation of two different currencies. Now, when we quote these currencies, one of them is referred to as what? A base currency, while the other one is referred to as what? The quote currency. The base currency is usually written first. So let's say, for example, we have the GBP JPY. This simply stands for the Great British Pound and the Japanese Yen. So JPY is the Japanese Yen, while GBP is the Great British Pound. So in this case, we say the base currency is quoted first, while the quote currency is quoted next to it. And more importantly, the base currency is usually assigned a constant value of 1. Now, what does this mean? We're saying that each time you see GBP JPY or you see USD JPY, what this simply means is that if we say that the base currency is assigned a value of 1, it means that whatever value you get here at every particular point in time, or that is quoted here as a quote currency, will give you the value of what? 1. So just back to the example or the analogy I gave earlier, if I'm saying that 1,600 naira will give me $1, what I'm simply saying is that if I'm quoting USD against NGN, which is naira, I'm saying that the constant value of the USD would be what? 1. So USD is 1. which means the value that fluctuates in this case would now be what? That of the naira. And in this case, I just said it's currently 1,600 naira. So if we are to use the example that I have here, GBP, JPY, so if GBP is 1, JPY could be 5, it could be 10, it could be 20, but the value of the base currency is always taken as what? 1. So let's look at our next slide. So in continuation, we say currency pairs are represented using abbreviations. Now, these abbreviations were put together or approved by the International Organization for Standardization. Now, some of these include the euro. The euro is represented as EUR. So whenever you're anywhere in the world where somebody is talking about Forex, the person mentions EUR, you know that the person is talking about what? The euro. Of course, USD refers to the dollars. The JPY, just as we looked at earlier, talks about the Japanese yen. CAD or CAD is often the short form for Canadian dollar. Then CHF is a what? Swiss franc. And then we also have an NZD representing the New Zealand dollar and a host of other abbreviations as approved by the International Organization for Standardization. Now, let's look at the types of currency pairs. Currency pairs are placed into three categories. We have the major currency pairs, we have the cross currency pairs, and then we have the exotic currency pairs. So just taking a step back, what are the major currency pairs? The major currency pairs, these are pairs that contain the dollar as either the what? The base or the quote currency. Now, these pairs are very, very special because they are special because they are usually the most traded pairs in the currency or Forex market. Now, these pairs are the GBP USD, which means the Great British Pound paired against the US dollar, the USD NZD, the USD JPY, the AUD USD, the USD CAD, the Euro USD, and the USD CHF or the USD CHF. So let's look at having seen the major currency pairs, let's look at the cross currency pairs. We say these are pairs that are without the dollar as either its base or quote currency. So I'll say again, the cross currency pairs are currency pairs that do not have the dollar as either its base or quote currency. So when you see any currency pair or any of the seemingly major currency pair paired against each other with the any of the major currency pair with the absence of the dollar, so we say that these are what? Cross currency pairs. So the if we have something like the GBP JPY, the Euro JPY, Euro GBP, Euro CAD, you can say AUD CAD, you can say CAD JPY. So when these other major pairs are crossed without the USD pair, we say these are what? Cross currency pairs. Then finally, we have the exotic currency pairs. These are pairs from the that involves one currency of a developing economy. What do we mean by developing economy? Of course, we know that most of the economies in Africa are developing. So most of the economies in parts of countries like in Asia, they are developing. And even some countries in Europe are developing. So when you take the currency of any of these countries, and then you pair them maybe against the dollar, against the pound, against the Australian dollar, or against the Canadian dollar, we say that what you've done is that you've produced an exotic currency pair. So some of the examples we have here, we have the USD against the ZAR. ZAR is the currency for South Africa. We have the USD against the Mexican peso. We have the GBP against the Nigerian naira. USD against Naira, GBP against ZAR. So just to reiterate, I said that we have three categories of currency pairs. We have the major currency pairs, we have the cross currency pairs, and the exotic currency pairs. And then we say that the major currency pairs, they are pairs that involve the dollar as either its base or either its base or quote currency. We said examples of these are the GBP USD, the Euro USD, the NZD USD, the USD CAD, and then USD CHF. We said the cross-currency pairs, they are pairs that are without the dollar as either its base or quote currency. And I said these are majorly pairs from the major currency pairs, but with the absence of what? The dollar. While the exotic currency pair, the major point there is that it contains a currency of a country with a developing economy. So let's look at the last slide for this introductory class to Forex for beginners. And that's some of the names that are given, they call it street names, that are given to these major currencies, or the currencies that make up the major pairs. So sometimes in conversations, maybe once you come into the current space, you can see somebody talking about the buck. So when you hear that, you know that the person is actually referring to the what? The United States dollars. So when you hear somebody talking about cable, the person is talking about what? The Great British Pound. Of course, the Japanese yen is just referred to as what? The yen. The Australian dollar is often referred to as what? The Aussie. The Swiss chef. This, I think the meaning of the chef is Confederatio Helvetica Federation. It's also often called the Swizzy. The Canadian dollar is referred to as the loonie. The EUR, the euro, is often called the fiber, and then the New Zealand dollar is called the kiwi. So just to recap everything that we've talked about, we said that Forex is simply foreign exchange. It entails the exchange of one currency for another. We said it's a very large market that involves a daily currency flow of as large as $6.6 trillion. We said that this Forex market, which we've said involves the exchange of one currency for another, often happens by the pairing of one currency against another, because what's actually traded is the valuation of these currencies, and that there are different type of currencies. We have the major, the minor, and the exotic. So this is going to be the end of our very first introductory class. And just like I've promised, I've put together other videos to back this up that will help us take us from this beginner stage till we are able to place trades on our own and gain experience in the market. So thank you for taking our time to watch this video, and if it has been of any value to you, I'd like to plead that you hit on the subscribe button, share and like, and then turn on your notification so that when the next part of this beginner series video drops, you'll be the first to know. Cheers.